Tiger Baseball Grapefruit League style begins today right here on 97.1 The Ticket. Tigers and Phillies at Joker Marchand Stadium in Lakeland, Florida. That's at 1 p.m. right here on The Ticket. Documents obtained yesterday by the Associated Press show University of Michigan officials were more than 4 decades ago that one of its doctors was fondling patients during medical exams, but records show Dr. Robert E. Anderson continued working there despite the demotion that he went on to allegedly abuse again. Jordan Eberle a hat trick. New York Islanders beat the Red Wings 4-1 to snap a 4-game skid. Anthony Mantha, the goal scorer for Detroit, who became the first team this year to be eliminated from the playoffs. Michigan State hires Wisconsin assistant Ted Gilmore as tight ends coach. He spent the last 5 years, the 52-year-old did, as the Badgers receivers coach. Michigan basketball today on the road at Purdue, 2 p.m. You can hear that at AM 950 WWJ. Oakland U topping Milwaukee 75-68. NFL Players Union Executive Committee have voted against recommending the terms of a labor deal approved by the NFL owners the previous day. The proposal included a 17-game season and shorter preseason, among other facets. At the Ticket Update Desk, I'm Jeff Lesson. For more, 97.1 The Ticket or radio.com.
Alrighty, good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Fried, alongside of me, Becky Alley.
Hey, good morning, everybody.
Hey, Becky, we had some fun yesterday, didn't we? You know, we cut these little promotions for this mortgage real estate show thing we do here, and we had a little fun yesterday, a couple bloopers for sure.
Yeah, it's National Margarita Day. Be safe, be responsible, but yeah, it's always a good time. We try to throw something together, but my team, I'm all about the props. Anyone that knows me knows I love props. So there's literally like a plethora. So we just went shopping and over in my team section and found some sombreros and just made it work.
Well, we bring in a great team this morning from eXp Realty. Tony Camilleri. Good morning, Tony. How are you?
Doing great. Good morning.
You bring an associate broker, Roberto Calderon. Roberto, you're awesome. I was picking on you last night. My daughter told me I had to call and apologize when you said you wanted to have your mom call in and say how great you were. I didn't think I was going to say it on the air.
Come on.
Well, she can still call in. I'm
if
sure
someone's not clapping for you like dance moms, and you got to find someone else.
Right.
Like clap for me like you're my dance mom.
No, that's totally true.
Absolutely.
And we bring, of course, 1 hour of the Hardcore Mortgage Show. It's all about mortgages and real estate. We got a lot to share with you. And of course, I always remind myself that, Tony, you're owner of United Credit Education Services, or one of the managing guys involved in it or something. Not the owner, one of the managing guys. And you're helping people with an unbelievable thing of their life called their credit. Becky, you must get your credit in order. Tony's going to share a lot of information about it.
Yeah, we preach this a lot, that you need to get your credit checked before you start looking for a home. There's no way that you can actually be truly pre-approved or have a bona fide pre-approval in your hand if you're not having your credit checked, because these apps that are out there that everyone's using, it's inaccurate information. The only way you're going to get your true scores is if you sit down with a mortgage professional at Capital Mortgage Funding or whomever you do choose, and you get your credit pulled and let us look at the details to set up a game plan.
Tony, one of the things is for sure, some people are apprehensive about it because they think that if we run a mortgage credit report, it's going to affect their credit score in a negative way in some capacity. Oh, wow. Can you share a little bit of that information with us? Just give us a little intro to it.
Definitely. Yeah. People are fear that's going to drop their score, but you're allowed to run your credit to get a mortgage. I mean, when you go to pull a credit for automobiles, for mortgages, you're allowed to run your credit within a 30-day period a few times because you're allowed to give you that leeway to shop for your mortgage or shop for the car loan. So it's not going to drop your score.
Yeah, and if you're so worried about that, then again, you probably have a credit issue, which really leads us to with the lack of inventory out there. And I wanted to sort of segue this whole conversation back about the inventory out there in your personal situation of you getting a mortgage. If you don't have your ducks in a row, it's extremely competitive right now because of lack of inventory.
Yeah, they're talking about right now the inventory. We're looking at it's going to be the biggest seller's market since 1982 because
Absolutely.
We're at a less than a 3-month inventory. So typically for a buyer's market, you need to have at least 6 months. So the last couple of years, I should say, we've had around 3.5, 4.5 months worth of inventory, and now we're below that. So it's definitely going to be, it's already competitive actually. So
right. I mean, if you're looking at year over year inventory numbers, we're actually 7% less lower on inventory than we were last year.
Right.
Last year this time, that's
yeah.
a huge number.
It's a big number, especially when you start thinking about what it does to the supply of the houses that are on the market. Because, I mean, as everybody knows, supply versus demand. So what does that do? That raises the median price of the inventory that's out there now. Now it's crept up from 150,000 to 171,000. I mean, it's almost 10%.
Yep, you got to do your due diligence for
That's
sure.
crazy, right?
Yeah, the inventory is going to affect your situation is because if you can improve your credit score too, Beck, this is one of the things we see so often is if you can improve your credit score, maybe you move yourself away from being an FHA buyer to a conventional buyer. Tony, I mentioned it to you yesterday. Roberto, you guys were on the phone. I said a lot of our FHA buyers out there, these are great FHA loans. These are 3.5% down. Opportunities with sellers concessions if you want them.
Right.
If you had credit problems in the past, bankruptcy, foreclosure, FHA, Federal Housing Administration, allows you into the home buying arena again versus conventional loans. But if they're not educated on the seller's end of things, it's hard to get that offer accepted.
Yeah, correct. A lot of people are afraid to accept an FHA offer and, even VA offers. So those are something that, I've closed FHA and VA loans in less than 30 days before.
Always.
So it's a misnomer that, FHA doesn't close like conventional.
For sure. It is definitely the wrong kind of stigma. If you are an FHA buyer, your offer is not going to be overlooked. Those days of, oh my God, it's FHA and they're going to make me scrape this paint. Okay, those are safety concerns. Those are things that you're going to want to address those things anyway. If you're trying to buy a house, especially when you're doing the private home inspection, the point of that is to protect yourself so that way you're buying a house with good bones. So and on a FHA, if you have some scraping paint or a handrail, you don't want grandma falling down, plummeting to the basement.
Right.
Those are
Correct.
normal things that you're going to want to address regardless, for sure.
We got definitely on the FHA transaction. Why the appraiser's a little bit stickier is because they know that the family is working with a little bit of assets. They can't buy a house and then 2 years later realize they need a new roof and they need to come up with $10,000. That's not setting you up for successful home ownership. So a lot of times, again, you have to figure it out. Whether you're a buyer or a seller, learn, get educated. Roberto, there's no doubt. We talked on the phone a little bit last night, and it's really all about the education.
Absolutely.
It's amazing as we sit back and watch the last few years of some of the different lenders out there in the United States promoting stupidity, like, hey, just click a button or something like that and good things are going to happen to you. That's not true. Otherwise, my phone wouldn't be ringing off the hook Monday through Friday of people trying to learn what they're doing. Or, Beck, we see it often now with the refi boom going on, and we'll talk about that. We'll talk about a little bit more about the interest rate drops. But what's happening now is there's an opportunity out there. And again, if you don't have that education behind you, because you guys are calling me now about refinancing, and you just bought the house a year ago and you don't know how to add 2 and 2 together. So it's really important. Get that little bit of knowledge behind you and it'll give you a little bit more confidence.
1,000%. We are huge advocates, as well as like the agents, we got Roberto and Tony here. They're advocates of knowledge. Knowledge is power. And when you're making one of the biggest investments for yourself, for your family, in your new home that you're going to be buying, you need to be educated. And we touched on the credit. You have to do it sooner than later. There's a difference between a mortgage inquiry and an auto loan inquiry versus you going to Home Depot and Lowe's and trying to get 0%. That is a totally different credit inquiry. Yes.
Oh, yeah. Big difference.
Now, Tony, you talked a little bit yesterday, and I was like, wow, Tony, I didn't even know that was going on. There's some new things going on out there. And you gave me some statistics, too. Run a little bit of statistics out there of what credit scores are in the national average, what people can do to fix things up.
Well, it's interesting that 68 million people have 620 and below, which, it's funny because you talk to people and they think I'm in the 600s, I'm good. And you're like, absolutely not. 620 is D credit, right? Actually, average is still in the high sixes. You want to start rolling into the 700s. Of course, you can get qualified and buy a home, but do you want to pay all that high interest? Right. So you want to get, you want to have the highest credit score possible. So, what I do, at our company, United Credit Education Services, we have an amazing program to be able to help educate. See, the key, if you notice the name, Education Services, we educate clients because people just aren't prepared for home ownership. And so you have to have everything in place, not just a good credit score, right? You want to have savings, which most people have no idea. So they need a budgeting tool. They have debt. They need to pay that down, right? If you pay debt down, people don't realize 30% of your score is determined by the amount of debt you have, right? So when you look at that, if you pay that down, you're going to increase your credit score just by doing that alone. So we have tools within our protection plan membership. So we help you improve your credit by cleaning it up. We help you with budgeting tools so you can save to get that down payment and then be prepared. As you said, Harvey, a lot of homeowners go in, they don't have a lot of savings. So we're giving you a savings tool, debt payoff tool, budgeting tool, and tools to monitor your credit because, listen, identity theft is one of the biggest crimes in America today. And you need to be watching your credit. People are trying to steal your identity every day. They always say people don't want to steal your old TV. They want to get your credit and buy a new TV.
I don't
Yeah, no
understand
doubt.
that. If these people out there that steal these identities and file false tax returns, if they actually put their efforts into something like substantial, they
Right.
might solve world hunger.
That's
I don't
right.
know.
We
say that all
It's
the time.
crazy.
I ironically got a call yesterday from the Social Security office here in America, and I'm like, "Oh, that's interesting." They're calling me, but so yeah, we're seeing it. We saw it a couple phishing scams at our office.
Yeah, I had one actually yesterday.
Right, so we got to be buyer beware on that stuff, and anyone be beware out there. They don't teach this stuff in school, so it's great that there's these systems out there. Tony, we also talked, Becky, as you know, lower credit scores are going to affect you negatively in a lot of ways. If you don't have good enough credit or any credit at all, you can't rent a car. You can't go out and get that lower interest rate on your insurance. You can't get it on your loans, on your mortgage. So lots of reason how credit really affects your life, and you definitely got to get a hold of that. I know it's something that's not sexy all the time, but you got to get to the front of it. You got to get in front of those troubles. You know who you owe, who
Right.
you haven't paid. Make that phone call. Get in trouble. You know, Tony, you could save a lot of money just by pulling your credit score up 30 to 80 points.
Oh, 100%. And, you mentioned that people aren't aware of what their credit score is. Get your credit run. I mean, you need to take a look at that. And that's one thing with our services. We help people get on track, monitor their credit. And then also maybe you have some things in the past that you need to clean up, right? You had some collections, late payments in the past. People aren't aware that they can actually have those things disputed.
Fix them all up. All right, we're up against our first break here. 9:11, if you're just joining us, it is the Hardcore Mortgage Real Estate Business Show. Come on back and join us. 248-539-9797. Back to the show. It's the Hardcore Mortgage Real Estate Business Show. Again, we are brought to you by Capital Mortgage Funding. We're powered by Fairway Independent Mortgage Corporation, NMLS 2289. And, of course, you can always call on the show here, 248-539-9797. We talk about if you're buying a house, if you're thinking about selling a house. Kevin, before we went off to the break, we talked about timing, and timing is everything, especially new construction. You got to sort of figure out, like, the time on the market. That's probably the most important thing. Getting with your agent and starting to talk about these real serious conversations. If your agent's not up for that conversation, you got to move on.
Yeah, you've got to find a new agent that can have that conversation. Building the plan is really, really important. That's important no matter what. I mean, if you're just going to, if you're going to buy a home that's already existing, you need a plan. If you're going to build a new construction home, you need a plan. But the timing, the on-market timing that you do across the board for that listing becomes extremely important, especially in the new construction world. You got to get a real feel for the timeline from the builder. And talk through the potential nuances of that. For example, with the products that we're doing, we tell people 12 to 18 months by the time we put the shovel in the ground. But that depends on how quickly do we design your house, how fast do you make your decisions.
How bad is the winter?
Yeah, there's a lot of factors that go into that. And
How much rain are we going to get that year?
So we have to give them a big range. And so sometimes if they're wanting to make a singular transition move, we have to put together a plan A, B, and sometimes a plan C for what they're going to do to sell their current home.
Right.
Those factors really, really come into play. And so sitting down really early, with your agent, it becomes very important to put that plan together.
Yeah, I'm glad you brought all that stuff up. Timing's everything. You said plan A, B, and C, and I like that because
and communication, because when you're going through these plans, like you said, things change. Every intent might be we're going to try to do this in 14 months, but things happen, and you have to always be in communication, make sure everybody's on the same page. And I don't always have to be a little bit flexible, but sometimes your best intent changes a little, and everyone's got to be on the same page with the same information doing.
And people don't realize how much coordination it takes to build a home. It takes a lot of coordination, and things have to happen in a certain step, and during those steps, you have to make decisions as a buyer, right? You have to make the decisions for what do you want here, what do you want there, not just where do you want your walls to be, but what products do you want inside? And if you can't make those decisions in a timely fashion, it can really, really change the timeline, right? I mean, a lot of the products that we've had that have really extended out their timeline really is due a lot of times to just buyer decisions.
Yeah, you
right?
can't. You got to know what your next move is for sure. And that's the thing with custom homes, Jim. I mean, anyone could build a basic home, and you're not moving any walls. I mean, that's not a custom home. What you guys do is you're sitting down with the families, and if they need to bump out that kitchen a few feet, you can move some walls. So you have in-house architects and all those type of things that make it a custom home.
For sure. And what contributes to the delays are sometimes the husband and wife can't agree on certain, selections.
How dare you say that after Valentine's Day?
Yeah. But that's the reality.
Right.
It's the key is to make timely decisions to move the process along.
And we try to stay on top of them. We try to give them gentle and soft reminders, and then they have to become larger reminders later that, hey, we need your kitchen decision.
Right.
We need your cabinet decision, and those kind of things happen along the way, but we help try to manage through that and try to walk them through that and help them make those decisions, as well as protecting them, right, from themselves. They may, a lot of people haven't done this before. They haven't built a home before. And Jim and the guys at Wolverine, one of the things that I really like that they do is when they're sitting down and they're designing a home with somebody, they can help walk them through some of the decisions. Say, hey guys, I know that you're not necessarily thinking from this standpoint, but I think that this bedroom should be over here for this flow purpose, and they're really good at saying, bringing up things, because the worst thing we want is, or the last thing we want is, we hand you the keys to your
All righty, welcome back to the show, 917. If you're just joining us, it's the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289. You can find us always at 1-800-LOW-RATE, the best mortgage banker, or out of the state. We do every state.
We're all
1-800
all 50 states.
1-800-3-LOW-RATE.
Yep.
If you're calling from out of state, but again, right here in Michigan or locally, 248-LOW-RATE.
Or if you're cool enough, you just hit Harvey right on his cell.
Just call me right on my cell. But anyways, bringing some great guys here from eXp Realty, Tony Camilleri, Roberto Calderon. You guys are just bringing a ton of knowledge. I think we might have to pay the station a little more and have you guys stay on for a couple more hours. But a lot's to talk about. And Tony, the credit piece is just humongous because families need to get a hold of this credit. And one of the things is for first-time home buyers is getting that credit score up, or people have had some trouble in the past. You just told me something. I think it's a home run. So now you've got this new thing set up with Experian, all right? Experian or Equifax?
Equifax and TransUnion.
Tell me about it.
Yeah, so basically, if you're a renter, which 40% of Americans are renters, you can actually take your positive rental history, you've been paying rent, which is your largest expense, right? And get that put on your credit report. And we can go back up to 2 years for both Equifax and TransUnion, which is going to definitely raise your credit score.
Okay, so what Tony's saying is, let's just say your credit was less than perfect the last couple years, and something that is going to prohibit you from having, so you could clean all that up and start paying things on time. But unfortunately, if you don't have new debt being introduced, that's good, positive credit happening for you. Sometimes you're not going to see those positive improvements on the score. So what he's saying, you're renting, why not have that rental history that you are, vigilant about paying on time work for you. So what he's saying is, with that documentation, we can add that to your credit report, and now you have this great rental history that's going to count towards you and getting your scores improved. And that's why, again, it's vital for us to look at this information. Harvey and I instantly, and if I look at someone's credit score, I'm going to be looking to see what they can do to improve it. And that, we can't talk about it enough. Because even though your credit's not perfect, that doesn't mean you can't buy a home. And that's what FHA and, so like in your mind, I need 20%. You don't. Okay. That's what FHA is here for. It is for less than perfect credit that's going to allow you to get into the home. It's that moving, that vehicle that's going to get you where you need to be. And then we can start, again, building that credit, start working towards those goals. And then eventually we can look to get you into a conventional mortgage once you have that history there.
Yeah. And you mentioned people with low credit scores, they get upset. They don't know, they're embarrassed a little bit, and that's what I love about what we do is educating people
Yes.
on all the different areas of credit. But one thing, the things that hit you in the past, maybe those late payments and collections, I mentioned it briefly, is that people aren't aware that you can dispute those negative items. And that's one thing, we do as a part of our program at United Credit Education Services is help people to dispute those negative things. And believe it or not, we've had success, over the last 15 years getting those items removed. And if you cleaned up a few of them, it may just give you just enough to get into that FHA mortgage.
I love everything that you're saying. Don't be ashamed or embarrassed because you don't know. We don't do this, you don't do this for a living. We do. Just like that's like me trying to go to a doctor's office and tell you what's wrong with your heart. I don't do that for a living. I'm trusting the experts that I put in place, my team that I'm going to put in place. So you need to trust us. We look at credit every day. We know what we're doing. And the fact that you're listening to some agents that are so well versed in credit, it's just that much power that you're going to have when you're trying to go to the table to get your offer accepted.
You get your credit score up 20 to 50 points, and all of a sudden you're a conventional buyer, not an FHA buyer, and the PMI is a lot less on conventional with the higher credit scores. It's going to save you money. It's going to open up a lot of doors for you. Again, Beck, we could talk about credit forever. It's
really good.
Hey,
I mean, that rental piece is such a
huge.
big deal. I mean, with the way that rental rates are right now, I mean, they're just higher and higher and higher year after year. And so you're putting all this money into your rent year after year. You better at least have some credit go for it, right? So that you can buy a house sometime.
Yeah,
Exactly.
let's talk about stop putting money in other people's pocket and let's start putting that money in your own pocket as
That's
far
right.
as your investment. Let's
I'll
get
take
you
that.
in a house.
248-539-9797. We'd love to hear from you. We do got a ticket text in. We don't go to those often. We want you to call in so we get your name and number, and that we can always follow up with you too. And that just ticket text basically says, I have an 18-year-old daughter. What would be the first way to get her credit started? And Beck, as you know, probably the first way is to be either a co-signer with her if you want to co-sign with your kids, or do the secured credit cards.
Yeah, actually, I was, I think I was like 17 or 18. I was going to Cancun for spring break, and it was like my mom was petrified and all that stuff. So she actually put me as an authorized user on one of her credit cards. And by the time I was 18, I was able to open up my own credit card. So I think she did when I was 17. So yes, that is a good way. My mom and dad are vigilant on their credit. They have the top at the top. So by her doing that, it allowed me to be able to, start my credit history at a very young age. And they educated me on making payments on time. The problem is that people just don't understand. And so just see what we're saying. If you're young out there, just make sure you practice what you preach. And you got to make sure that if you're going to have that credit extended to you, you got to prove that you can actually make those payments on time.
Yeah, you got to pay the gas. Either you pay cash at the pump, or you're walking in there, or at the end of the month, you pay for all those tankfuls that month. You're going to put gas in your car anyways. It's a great way. I always tell people it's a great way. It's something you're going to need weekly. And at the end of the month, you were going to spend the money anyways on the petro. Go ahead and pay that off on time and move forward. Hey, real estate's fun. That's one of the things I think with buying homes, that a lot of the energy's out there, and it's scary, but it should be fun also. So just to switch the tune a little bit over here, what features do you find? And again, Roberto, you're out there in the with the people
Out in the trenches.
out in the trenches, buyers and sellers. But
That's right.
I always like to bring the fun part of it. What features recently, including maybe some additional living spaces, are families looking for right now that are really fun and exciting?
Oh man, well,
I don't going to stump you on that, but
no.
it could be the regular stuff.
No, it's funny because it's like everybody needs storage space. And so if you don't have a basement, you want a garage.
You're preaching to the choir over here. Storage is key.
Right.
I like that. If you don't have a basement, you need a garage.
Right.
Okay.
And it's funny that you mentioned the FHA sorts of programs, because a lot of these programs, you have a first-time home buyer that's only going to buy a house that has 100,000, that's only 100,000 or maybe 110,000. And a lot of these homes don't have a garage. But what do they have? They have a basement, or they don't have a basement, and they're on a crawl space or a slab. So people kind of have to, figure out what they want as far as storage goes, and then you get those out-of-state buyers, the ones that are like, it's Michigan. I need a garage because there's going to be so much snow in Michigan.
That's right, no doubt.
And here we are. We got sun, right?
40 degrees and sunny
40
this
degrees
We
weekend.
and
haven't had a
sunny,
lot
and
of
here
snow
we
the
are.
last couple of winters, but I mean, I like snowboarding, so I don't mind the snow. But you're right.
I'm with you. I'm with you.
You're right. We need to prepare for it, because like as soon as you're not prepared, that's when we're gonna get dumped on. So
Well, but people are thinking like this isn't, the home market isn't warming up yet, but it is. It's you and I
boy.
were just saying it's warming up now. I mean, with low rates, right? Low rates,
Lowest in a long time.
low unemployment,
Yes.
and then the high rental rates I was talking about. I mean, that just makes for a really it encourages a healthy demand for 2020 homes.
Yeah, like what you're saying right now is what we're in the middle of is a perfect storm. We have rates are very low. You have the FHA loan limits have now been increased to 331, 760.
I'll help you.
Okay.
Wow.
Yes. Yeah. I forgot the 760 part, but you have the rates. So what does that mean? It's more buying power for everyone out there, but then you also have this lack of inventory. So if you find the home that you are looking for, do not hesitate. Let's make that offer. Let's get you in a position to know what you're doing so you can do it, because you never know what's going to happen from day to day. And like right now, February, it might as well be in the middle of the spring summer market right now, because it is the busiest it's been since I can remember.
It's definitely rocking. 248-539-9797. We definitely want to hear from you. Man cave, she sheds, granny pods. That's a new one for me. I hadn't
My
heard that
mom wants
one.
a she shed in my backyard. She's like, where's my she shed or she shed?
Those are always fun. Extra living spaces, attics, garages, those living spaces over the garages. Those are fun things. Buyers also interested in living on the water. Always popular search phrases: lake view, canal, docks, rivers, lake storage, water's edge. Those are these pretty good words that people are punching in out there on the Googles. And it's fun. These are all fun and exciting things.
Yeah, definitely. Everyone loves water. They want waterfront. I don't care if you if there's a pond in the back, that's waterfront. So they just want to look at it. There's something peaceful about it. I'm always trying to disappear to the warm weather, go down right to the ocean, man. I just want to see the water. But that is so important. People love water
High-rise
views.
loft condos.
Let's get you in that second home.
All right, somewhere near the water. Water's edge. All right, we're up against a quick break here. It's 9:26, 248-539-9797. When we come back, all your calls. Always want to talk about refinancing real quick. Of course, we'll get into the purchasing business and selling and buying. But of course, Lisa, as we know, mortgage rates, again, back to like these 2011 rates where they're all-time lows. Great opportunities. Hey, it helps you guys. It makes home ownership affordable, as we've been
Extremely affordable.
6.6% appreciation. Yeah, folks, the costs are going up. Homes aren't going down. So maybe get in there right now. Maybe you've got another 30 days of a window to purchase that house. But Lisa, let's talk a little bit about debt consolidation loans, just real quick.
We've done quite a few.
Right after the holidays, people are getting those bills.
They get their credit card bills and we're like, so then we get a phone call. It's a phenomenal thing. Debt consolidation can obviously pay off loans, pay off student loans, pay off credit card debt. You could take cash out, use home improvement. Doesn't always have to be debt consolidation. But I think I don't know if I shared with you last week, I had a woman planning on retiring soon, and she was trying to get things kind of settled so she'd be ready to retire and have her, know what her fixed income is. And we ended up saving her $1,205 a month. Debt consolidation pretty much took equity out of her house, paid off everything.
Yep.
And that's real life savings. That's including this slight increase in the new mortgage payment, minus all the debt. So this is the time to do it. The rates are phenomenal. I mean, like everyone's been saying, it's almost 2011 rates. You have the opportunity to either consolidate debt. Sometimes you can consolidate debt. All that savings then can get socked away. Maybe your goal is to move. Maybe your goal is to, upgrade soon, but you just can't seem to get there. The other thing we hear all the time is, I don't have quite that much equity, or I don't have a way to save, or, I'm ready to move. I can afford the monthly payment. I just can't afford the down payment. Right. We hear that all the time. So sometimes debt consolidation can help with that. It might be that you do it now, so you'll be ready next year. But this is the time to have these conversations. Rates are really low. We need to take advantage of it if that's what you're interested in doing.
If home ownership's around the corner, too, and we see this so often, don't go out and buy that car quite yet. It could affect your debt-to-income ratio. So you can buy a car anytime. It doesn't matter if you're buried in debt. The car dealerships around here will definitely give you a new car. Right. God bless them. I love that. That's okay.
A double-digit interest rate.
And that's fine. Not always, but that's fine, too. But, don't do it if you're going to be buying a house, because you can't buy a house if you're too much debt. Of course, the debt-to-income ratio does fall into that. So get with the real professionals. Debt consolidation has been helping so many families. Not for everybody.
But even if you don't need to consolidate debt, the rates are so low that we can do what we call a rate and term mortgage. It means either we shorten the term of the mortgage. You might be say you're in a 30-year mortgage and you're 5 years in, so you've got 25 years left. We can evaluate that. Sometimes we can get you into a 15 or a 20-year with a very similar payment because the rates are so low. Now you're building equity faster, which means when you are ready to sell, you're going to have gobs and gobs of equity, or we call, net proceeds when you sell, to put down on your new house. So it's not always about taking out debt. Sometimes it's about planning for your future, and there's a lot of different ways that we can accomplish that.
Yeah, I'll take $1 for every time we say planning this morning. Kevin talked about planning A, B, and C, so I'm never going to forget that because, right, things do change,
Right.
and they change quickly, so you got to be prepared for them. All right, before the break, we talked about real pre-approval letters or approval letters.
So important.
Jess, you're working with buyers every day. These homes are flying off the marketplace.
Yes.
Even now, I'm already hearing, especially between 150 and 300, the homes, there's multiple offers already. So if you're thinking about buying a house, if you haven't given the mortgage person the documents, you are not pre-approved. Lisa, are we okay with that? Can I say that?
You may be pre-qualified.
Yeah,
That's
means
different. They're like, I have an approval letter. It said, no, it says you are pre-qualified. It's based on the verification of all your information. Once you provide all your information, if it doesn't match what this qualification was under the assumptions of, then no, it's a no-go. You know what I mean? So pre-approvals are so important. It is pretty much like cash in the bank. It means we've reviewed all your documentation. We got your tax returns. We reviewed your income. We had a discussion. Maybe you had a low year to date last year because you had to take 6 weeks off. You broke your leg. We are covering everything that an underwriter would look at, so we have no hiccups. When you give that approval letter to your agent makes that offer, it is good as gold.
There you go.
That's
You're
the
ready to
point.
go. And most
Yeah.
transactions, as you guys know, Kev, you're on the listing side a little bit more. Most of the time, the sellers are in a position where they're ready to go, but not always. So as we talked about earlier in the show, the timing again. Although we want our buyers to be prepared and ready to close in 30 days, all righty, welcome back to the show. 9:31. What a gorgeous day out there. 40-degree weather this weekend. You know, not bad for February 22nd, Becky.
No, it's not.
All right. You listen
I'll take
to
it.
The Hardcore Mortgage
Everyone's
Real
got that
Estate
itch
Business
because
Show.
it's been so nice lately.
I know.
They say
cold, but
48
it's-
tomorrow, man. It's gonna be
Yeah.
it's gonna be like hot,
All right.
short weather.
We don't have one of those springs, though, where everything starts blooming and then all of a sudden and then we have a deep freeze again because that did ruin some trees in the past. So definitely we'll keep an eye on that here. But we want to hear from you all morning long. 248-539-9797. Making real estate and mortgages as fun as we can here. Let's move off to Fred because, Fred, you got a tough question. Questions about trying to buy a house with a bump on your credit. Tell me more.
Well, I have a bump on my credit, a divorce, and a bankruptcy. Bankruptcy probably about 5 years ago. Divorce 3 years ago, and I in the market, I believe, to buy a house.
No,
And
it's
I don't
great.
know-
I'm
I don't
telling.
know.
Go ahead.
I don't know what to do now. I mean, I've fixed my credit. My credit is going up, and I don't know. I need a little guidance or direction.
Well, the first thing is we'd get you in the office or we could do it over the telephone to get you moving in the right direction. And we got to run that mortgage credit report. So often families are confused with the consumer credit report versus the mortgage credit report. And the model that they use for the mortgage credit report, yeah, it's a little bit different. But we'll have to dig into it and then see what the credit looks like. Do you know anything about it? Is it a situation where you just completely walked away from credit cards, some debts, or a car or repo? What do you have that's so bad?
It was credit cards.
Okay, but you did the bankruptcy, you said.
Yes.
So everything's been, was that a Chapter 13 or 7?
I believe it was a 13.
Okay, so have you paid all of that off? Are you still paying that or has it already been discharged?
It's been discharged.
You can buy a house one day out of
That's
discharge.
Yep.
Yeah,
I'm sorry?
you might be able to buy a house right now, Fred. Yeah.
Oh, really?
Yeah, one day out of a Chapter 13 discharge with a letter from the trustee allowing you to move forward. Yeah, you're ready to go right now.
Oh, sweet.
Yeah, how much? I'm just curious too, Fred. And of course, we'll call after the show and get a little more technical. We don't want to tell everyone your secrets here, but real quick, what have you been paying in rent over the last couple of years?
Oh, about $500 a month.
Well, that's pretty cheap.
That's a steal.
Yeah, that's a steal. Have you been saving money based on that? Have you been able to save some money? Oh, good. Fred, you sound like you're going to be a buyer. Let me just ask you something. When we call you later, what cities are you going to be looking at?
Oh, probably downriver.
Fantastic. All right. Plenty to choose from. And the girl right to my right here, Becky Alley, she
Yeah.
knows a lot about it because she's from down there. And, of
Yep.
course, we'll get you all set up. So, Fred, it's a great call. I'm glad you made the step just to give us a call. Cost you nothing, no obligation at all, just to find out where you stand in all of this. So it's a great call this morning. Thanks a lot.
Yeah, a lot of people think that they're not in a position. You know, they think they're not going to be ready to buy a home, but the reality is that sometimes like, oh, I'm not ready. You are. You just we're afraid, and we just need to answer your questions and look at the credit.
Educating
Yes.
everybody, helping and educating. Just,
It's
I mean, what a
everything.
new chapter to this guy's life.
Yeah.
Right? It's going to be completely
Clean
new,
slate. Yep.
clean slate. He's going to be able to build wealth for himself and be able to go forward and really feel good that he's been able to like walk through the whole thing with his bankruptcy and
It's a
his
lifestyle
divorce. I
thing.
mean, it's a whole
Yeah.
new chapter.
It's time to turn the
That's
page.
great.
We get
Good for
people
him.
like this all the time, and all of a sudden they buy a house, and now they're renting a room out to their friend, and you know
Yeah.
it's cut in half, and there's a lot of great things that can happen. Let's move on with the calls here. We got Terry. Terry, I'm not sure where you're calling in from. You got a question about an appraisal that didn't match up. That's a good one. Go ahead, Terry. Tell us more.
Well, I was thinking of downsizing. We worked with a builder, signed an agreement, and paid a $5,000 deposit. And the appraisal did not come in $7,000 too low.
On a new construction house, you're saying. And a quick question, Terry.
Yeah,
Is this in
a
a
new
subdivision?
construction house.
In a new subdivision also? So there's
It was the very last phase of the new subdivision.
interesting.
Yeah.
So when you sign the
So then,
Mhm.
well, and I thought maybe I'll just bring the $7,000 to closing, and I got a bad feeling. So I looked at the appraisal closer, and I found that they had added in things that I was not getting: a dishwasher, a walkout basement, a $12,000 deck, to even more inflate the appraisal. So I questioned them, and they got really not nice to me, and I went back out, and they threatened me with a lawsuit, and they won't refund my deposit. I had to get a lawyer, and I just don't know. I can't believe they can get away with it.
You know, let me jump in with a little bit. There's no doubt. I agree with you, and I feel your anger. I've spoken to many borrowers in the last 5 to 10 years that were sitting down with builders, and they're being directed and steered basically legally, unethically, to the in-house lender. So now you don't have anyone representing you. So the first thing for all the listeners is that we'll match. Yeah, of course it is. And then first thing I want to throw out there to any listener is Capital Mortgage Funding, Fairway Independent Mortgage Credit Center will generally match or beat most of those offers. The incentive that
you
they
can
give
choose.
you can choose.
You can choose.
Becky, they're taking their rights away.
Yeah.
And Terry, give me a little more on this, Beck. But Terry, we'll definitely follow up with you. Tell me a
I
little bit more.
appreciate it.
Yeah, so like, I mean, when you are in a position where you feel like you're being steered in some kind of direction, because obviously a builder, they want their hands in all of the jars that they have. They have their title people, they have their mortgage people,
Right.
And
Yeah,
and also with your real estate agent, right? Like when you sign this purchase agreement, were any of these items in this purchase agreement, the add-ons?
Hey, Tony, what were you going to add to this?
Were you represented by a buyer's agent or did you go direct to the builder?
We went direct to the builder, and
Yeah.
in fact, the lender was their preferred lender, but he got very cold feet about it, and they called him and just ripped him, and he ended up getting 18 comps because they kept telling him he was wrong, and the 18 comps all came down. And so I've done a few more investigations, and I think subtly they add a few things onto these appraisals that nobody catches.
Well,
guys.
Not to cut you off, but that's where it's a great lesson in having a buyer representation. As realtors, we represent buyers, and you were not represented. So of course they directed you, and you had no recourse. You had no knowledge. If you had a buyer's agent, they would have been seeing all those things that they were adding in. They would have been negotiated for you and represented you. So that's the danger for all those that think they can get a better deal by going directly to the builder. You can see how that can really flip on you.
Terry, it's interesting. This call is really interesting. I have a feeling that the house isn't done yet, and what they actually did the appraisal on was based on those add-ons, or was the house already built and the appraisal's done? It sounds like it's not done yet.
The ground wasn't even broken.
Yeah, that's the issue.
Okay,
yeah.
yes.
I
Okay.
had to read through that. See,
yeah,
guys?
yeah.
I pat myself a little. But Terry, we're going to call you after the, definitely after. This has come up so often here. Thanks for the call, Terry. So often, but Tony, you throw it out there. Proper representation, knowing what your rights are, having somebody who's built or done this a couple hundred times is a huge difference versus someone who's just got their license. I don't care
Tony,
what
I
you're
think
doing.
you should tell everyone out there listening, what does it cost a buyer to have a buyer's agent represent them?
I love it. I'm smiling. 0. So
One more time for the kids.
$0 for you to have a realtor, a professional realtor represent you. is zero. The seller pays the commission.
Right, and the builders have worked this already into their purchase price and everything. Now, yeah, it's a better deal for them. Might you, in the craziest situation, be able to go to a builder and have them represent and maybe knock down the price? Not really, because what it does, Tony, as you know, it changes the values in the neighborhood.
Yeah.
They can't give you this $300,000 house and charge the 3 or 4 other families $340,000. They can't do it. It won't match up. It won't jive. It's a great call, man. This, I'll tell you, I need another 2 hours today on this show.
But that just makes me mad, though. Doesn't that? That just really makes me mad. Because you picture somebody, they see a beautiful house, they get swept up in the emotion, they walk in, they think that they're going to, they have all their ducks in a row financially.
Yep.
And so
And
they
they
walk
buy.
in confident, and they want to buy, and then they see this beautiful house, they talk to somebody that's representing the builder, and not representing them, but representing the builder, and then they get taken advantage of.
Okay, true story. This happens often. So, of course, we've been doing the show for 20 years, and we're proud of it. We've had people call us who were rejected from the in-house lender, and then we go ahead and save the builder's skin and get the people closed in 30 or 45 days. So it's happened to me 3 times.
Wow.
I call the builder, and I asked them, after it happened 3 times, I said, can I now be on the preferred lenders list? And they said no.
You're kidding.
They said no.
Blasphemy.
Yeah, don't worry out there, Mr. and Mrs. Builder. I won't say your company on the air today. Maybe next week.
Hey, well, I use capital mortgage funding for my second home that I built, out in Northville. Yeah, it was awesome. So you guys did a phenomenal job for me.
All right, thanks, Tony. We'll let you say good things to us later, too. All right, when we come back, 941-248-539-9797. Keep it here. The Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. Give us a call all day long. I know Sarah's there. 1-800-LOW-RATE, the best mortgage bank. That's 1-800-569-7283. Again, I mentioned keep it here on 97.1. Pat Caputo in sports at 10 o'clock. 1 o'clock Red Wing hockey. Of course, the pregame a little bit before that. We still have lots to talk about. The last conversation. Let's go to Mike, and we'll dive back into our ROI conversation. Yep. Hey, Mike, you got a question about mortgage refinancing from Ann Arbor. What's going on?
Yeah, so I'm paying about $1,000 a month in mortgage, and $500 is going to interest, and about $500 is going to principal. So if I refinance with these new low rates, what exactly would go to interest and what exactly would go to principal on a refinance?
That's a specific question with your specific details. And so truthfully, the answer is we would have to know what those details are. But when you start a new mortgage, even a shorter term...
I just told you, I'm paying about $1,000 a month.
Right.
How many
and
years?
$500 is going to principal,
Right,
and about $500 is going to
But
interest.
that's because you've been in it for how long?
15, 20 years.
Right. So when you start a new mortgage, the majority of the money goes to interest and less goes to principal at the beginning of the mortgage. And the longer you are in it, it swings. Then all of a sudden you're about halfway point now. Mm-hmm. And then as you come to the end, it'll be almost all principal. That's why we ask these questions. So
what would be the initial
I would run
interest rate?
Well, hey, Mike, how about this? I mean, any of us could I can go to the computer after work here and punch in an amortization chart on a 10-year for you. So if I punch in a 10-year, let's just use this for hypothetical. If I punch in a 10-year term on whatever your balance is, it's going to tell me right there. I'll send it to you. It'll say 120-month term, how many dollars goes to principal, and how many dollars goes to interest. Mm-hmm. If that makes sense for you, you're a candidate to refinance. Sometimes it does work those numbers, and sometimes it doesn't. What's that balance on the mortgage? Did you say 100? How much is your balance?
Now?
Yeah.
About 100,000, yeah.
Okay, so you know what? You left your number with us. This is more of a call where I just have to punch in an amortization chart and see what the numbers look like. And then we could compare the existing amortization chart you have with what maybe a new offer could be. But potentially, if you've been there for 15 years, potentially a 10-year fix could knock off some interest. Lisa, do you agree with that?
Yeah, knock off some interest and knock off 5 years of term if you're planning.
The majority of the payment will be interest
in the beginning.
No, not for the 10-year, though.
It's still in the very beginning.
Yeah.
It won't be half and half. But yes, it doesn't take long to get to that half and half point on a 10-year.
We've got to see the numbers. It's a great call, Mike. We just have to run the amortization chart for you and take a look at it.
Thank you.
All right, thanks for the call. Appreciate it. 248-539-9797. Hey, he's from Ann Arbor, man. He's supposed to know these things, right? All right, we'll keep that, and we'll keep that next time. But 248-539-9797. Having a little fun here. Don't take it personally. Let's talk about ROI, return on investment. Yeah. This is some serious stuff. We had the call about the gentleman who wants to replace the carpet, hardwood floors. Jess, you said it yourself. 95% of the families out there, they don't want carpet anymore. No offense to the carpet guys, because a lot of families keep it upstairs. It's warmer.
In the bedroom.
Brand new carpet. Yeah, hey, salute to the carpet guys. Sell your carpet today. Because, yes, carpet's still got plenty of beautiful different styles, the shags, the flats, whatever it is. But it does get dirty over time, but it is a warm feeling. But Kev, you know more about this. ROI, you're a professional real estate agent. What money? We see sometimes people stressing over this. All righty, welcome back to the show, 9:45. What a gorgeous day out there. If you're going to get some things done, today's the day. Definitely go look at a house. Call that real estate agent up and say, hey, I got an approval letter here from Capital Mortgage Funding. I'm ready to go buy a house. Make it a lot of fun for you. That's the way to go.
Yeah, Tony and Roberto, at your service.
That's right. We're here to take you out.
That's actually my tagline.
248-539-9797. If we didn't get to your call and we dropped you or whatever, call on back here. We definitely want to hear from you. There's so much to share. This has been a good show this morning. A lot of topics that have come up that are things that are real. That's definitely going on. Becky, as you know, we got to touch on the refinance transactions out there. Yes, if you refinanced your house already in 2019, just at the end there or just closed, take a look at it soon enough. Again, usually we need you to make 6 house payments. All the lenders out there agree. We don't normally step on each other's feet out there because of the recapture fees and stuff. There's opportunities out there for families to refinance again. And I bring it up for a couple different reasons, Beck, but one of the number one reasons is if you're getting blindsided, Tony, as we talked about, so many families out there, the lack of education, so they close on the house, and we see this back, they're all happy and everything, but next year the city reassesses your home and how that all works. Reassessment of homes could really bring your property taxes up. Now, there's so much to know about there because it all has to do with Proposal A that was way back in 1994. So in 94 and 95, the way Michigan set it up, was they would do after your house was reassessed, then it could only go up. Your property taxes could only go up based on inflation and never more than 5% in any given year. But after your taxes become uncapped on a house, if you're buying a house, Tony, as you know, you guys all know, and you buy and you close and the taxes are $3,000 a year, but that family had lived there for 10 years. Yes, you can calculate it prior to closing. Your taxes will probably be over $4,000 the following year.
Yes.
Reassessments list. The cities aren't playing around. We went through really tough times here. 2007 to 2013, 14, the municipalities didn't have any money coming in. People were walking away from their homes. They weren't paying their taxes. Associations were getting burned. Well, now's the time with all the homes being sold and flipped. Roberto, you see it so often.
Right.
Yeah, they're going to come and get their money, and that's okay. I don't mind paying. I pay for the millage, and we all vote for the millage when we want to increase the fee or the pay structure for our police, our firemen, our libraries, our schools. If you're moving to that city, you want that. You want higher taxes on that stuff.
Yeah,
Well,
you want to know
maybe.
that you're buying a house in a great community.
That's right. Yeah, I mean, it's definitely something you got to pay attention to because we take buyers out, they're searching all over the internet and they go, oh, wow, these taxes are really low. And that's where, you have to let them know that they could be much higher. We look at how long that person had lived in the home. And the longer they're in the home, obviously, the higher those taxes are probably going to go up. So that's something to pay attention to when you're looking at homes.
Yeah, actually, it's on the internet, too, so you can definitely punch it in there and sort of get a preliminary estimation or guesstimation of what your future taxes could be in any city. You can share that with any cities. Find out what millages they might have coming up, what votes might be coming up,
You
things
can
of that.
call the city and say, I'm looking to buy this house. I would like to know what my projected taxes would be once they become uncapped. And you'll get the best idea.
Right.
Then we can project that.
And with that being said, so a lot of you got that surprise party. Here you are a year or 2 years after, and you got the surprise party. Yeah, not the one you want to go to. And the tax bill comes, and you're like, oh my, and you're running down and calling the city. Okay, here's your solution. Now the interest rates are at all-time lows again. And if you bought a house in 18 or 19, early in 19, definitely call your lender up. Call us at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage bank. Let's see if we can save and bring that payment back down to where it needs to be. All right, let's move off to another call now. We've got your namesake here, Tony. Tony calling in from a cell phone. Good morning. Welcome to our show. Hold on there, Tony. We're going to click that in. All right, there you are. Hey, Tony, good morning. Welcome to the show. Go ahead, sir.
All right, great. Thank you. Thank you for having me. Just wanted to kind of touch on a few things. I'm actually a mortgage originator myself.
All right. Hey, there you go.
Did purchases for like about 5-6 years, and now I work for a different lender. We only do portfolio, so we only call our service clients. And, like you mentioned earlier, end of 2019, rates have dropped a little bit more. So we've been calling those borrowers that are, 6-7 months into their payments and kind of doing, either FHA, VA streamline or conventional rate and term. But I did want to add about the new construction and going up against the builder's lender. Back when I used to pre-approve borrowers for purchases and, they kind of thought about, hey, let's do a new construction and viewing homes and whatnot and plans. Of course, the builder's lender would offer, the builder would offer that they had an in-house lender and pre-approve them for the same exact, price, rate, whatnot. They always added that, $4 or $5 or $10,000 of incentive, so it was always hard to compete against them. Even though if I offer them a lower rate or maybe charge them less in origination, that was kind of tough to compete. Just them being scared because of the few $1,000 incentives. But I did have a borrower that went all the way with me. We pre-approved him. He was buying a second home in Florida. And it was a new construction. When we appraised it, or when the appraiser, came up with the value, it was, a few $1,000s short. I think it was like 16 or 20,000. Sorry. And sure enough, he dropped the deal with us and started working with them. And I called him, a few months after, and he said, yeah, the home appraised for $10K more. I worked with the builder's lender in-house, and they offered me all these incentives. But one of the things that kind of, makes you think, like, are they ordering these appraisals, and of course every builder is different,
Let me go ahead, Beck. You want to round it up?
I was just going to touch on, I get where you're kind of going with it. I mean, so obviously like an appraiser, you want to have someone that's a neutral party, third party that's going out, so we don't want to actually put it out there that they're like picking their appraisers, right? Because it does have to be like, it has to be a neutral third party person. But when it does come to new construction, there are several additional pages that are in a purchase agreement when you're buying a new construction home. And you need to have someone representing you that's going to go through the fine lines and the details. One of which might be the builder is going to say, I'm not going to pay the transfer tax. Or if you use my in-house lender, we will pay the transfer tax. So what he's saying is sometimes they'll use these incentives to kind of like get you to use their in-house lender. But at the same time, we're going to put ourselves in a position at Capital Mortgage Funding where we can compete with that because we don't want you to feel like you're trapped. And, an transfer tax that could be, depending on if it's a $500,000 house, it could be like $3,000, $4,000, $500, or even an owner's policy, so those are key things that's why you need to have a buyer's agent. You need to have a neutral party representing you that's going to keep you and guide you in a new construction, especially with the low inventory. New build and new construction are going to become more of a player in 2020. So those are things that you need to understand if you are looking at a new construction home.
Tony, thanks for the call. We appreciate you calling in as a loan officer. Keep up the hard work, man. We appreciate you. And again, a lot of great loan officers out there. We'd like you to call Capital Mortgage Funding and always give us a try because you'd be dealing with the experience that we bring to the table. And again, the lowest rates and the lowest cost. Hey, we got time for sneaking another call here. We got John calling in from Detroit. Good morning. Can we click that in? Hey, John, welcome to the show. Your mother's upside down on a house. Tell me a little bit more.
She owns a home in Flint Township. Back before the market crash, it was once appraised for $70,000. Small home, 3 lots though, 2.5 car garage. But it went completely upside down. She still owes $40,000 on it, and there's bigger homes in the neighborhood going for like $20,000 and $19,000.
That's odd. Yeah. You said Clinton Township too, John. Roberto, you're an expert in Macomb. You're out there. That doesn't sound right.
That's one of the biggest places right now. One of the top 5 places to buy in Southeast Michigan is Clinton Township.
I got to say, I have 2 or 3 transactions in Clinton right now.
Yeah.
So, John, I got to think, is your mom's house in decent shape? What's going on?
Yeah, it's pretty decent shape. It's just the neighborhood is gone downhill quite a bit. And their neighbors sold their home, for $10,000. and it's really, I mean, they're just getting out of it to get anything they can, and if she can't sell it to a family member upside down. I've been renting the home from her and doing the upkeep in the yard and the house.
Have you guys had the house appraised recently?
Not recently. No, it's been quite a while.
Well, you know what? Maybe before we spend money on an appraisal, maybe we can, Roberto, you know what? We're going to have Roberto call you after the show.
Yeah.
John, let's just dig into it a little bit more. We'll find out what's going around in the neighborhood. Maybe if you want to stay there, maybe you're need to buy it from your mom. She needs the funds or something like that within your family. Let's figure it all out and get some experts involved. I just think we need a little bit more knowledge on the area and what's going on.
I understand, absolutely. Yeah, there's quite a bit going on, and I know I can't buy it while it's upside down. So
hard to think that anything in Clinton Township would be worth less than $50,000. I just don't see it.
There somewhere.
There's got to be something.
Flint Township.
Oh, Flint Township. Okay, well, Flint's been a little, I mean, Flint with the water crisis and everything that's been going on with the automobile industry, leaving there, 30 years ago. Yeah, those things are still affecting the Flint area. Hey, still, let's get the experts involved. Let's run some comparable sales, see what's going on over there. Thanks for the call, John. We appreciate it.
Thank you so much.
All right. 248-539-9797. Oh, we're not even going to have time to sneak in your calls, but if you do call, definitely leave your name and number and we'll get back with you. Just a couple different things. You guys want to throw anything out there with buyers and sellers as we're heading into this? It feels like spring outside today. So that's why I got so much additional energy.
I'll just say, if you're looking to get in the market, get your credit run, get with Harvey here so you can know what you qualify for. Don't go out looking at houses and not know what your payment's going to be and your taxes and all of that, because you're going to get, it's upsetting when you find out, oh, wow, I have to lower what my expectations by $100,000.
Full
don't walk the
steam
plank
ahead.
alone.
There you go. We're there to help you, and there's always no obligation. You could save a lot of money by getting educated. You guys are fantastic. I told you last night we'd have you back.
Oh, yeah.
This is good. You guys back. Roberto Calderon, thank you so much, sir.
My
Fantastic.
pleasure.
Tony Camilleri, eXp Realty, and they know how to help buyers and sellers out there. Definitely keep it here on 97.1 The Ticket. We got tons coming up. Probably Dan Dickerson coming up for the Tiger game at 1 o'clock. Keep it here on 97.1 The Ticket. I'm Harvey Freach. She's Becky Alley. We'll see you next Saturday.